Hello guys. Okay, this is Kedra here. Want to take a moment and read over a few year-end tax strategies for small business. If you are one of my clients, shame on you looking at this because we need to be planning all year round. We need to start planning early in the year so that we don't get to this last week, last month, and then kind of try to figure out. But I'm going to go over some that are common that people have called and asked me about, and I will give you my little opinion on that. Understand that everybody's situation is 100% unique, and we look at them as unique, and that is why we have the opportunity for you to schedule a tax planning consultation with me directly. There is a fee for that. However, that is the fee is nothing compared to what you're going to save in taxes as a result of our conference if you put in place the things that we talk about. So definitely worthwhile to do it. But with regard to this year that's ending 2023, pretty much you either have done it or you haven't, but just in case, let's go through some of these. And again, this is not tax advice. This is not CPA advice, none of that. This is just going through a list of year-end tax strategies and giving my editorial comments. If you want advice on your specific situation, please schedule a consult, and I will have the link in the tab in the description here. So I'm just going to start off end of year tax strategies for small business. Getting a jump on tax planning and preparation will, of course, save you time and money in the long run. It also will allow you to get the most out of your tax preparation for the current year. And so you always want to do a little bit of planning ahead of time. My recommendation is throughout the year. So you do your initial planning right after the tax filing deadline. If you filed or not, whether you filed or extended, you do, but it's planning for the current year. So in this year, 2023, we would have been planning for 2023 throughout the year so that when we get to December, we've already done all the things that we needed to do. Okay, so I just want to be clear on that. But in case you haven't, here are some things. Consider implementing some of these end of year tax strategies for your small business. Now, some of them I'm going to leave as is. Some of them I'm going to throw my editorial comment on. 1, buy a work vehicle. If you need to haul stuff or people around in your business, or you're a trucker or whatever, consider the tax advantage that comes with buying a work vehicle. So whether that's a heavy SUV, whether that's a truck for over the road use. So of course, if you need a truck or you're planning to trade in your truck or your car or your business vehicle, be sure that if you want credit for that in the current year and to be able to get some bonus depreciation, it's no longer 100%, drop to 80%, or Section 179, which is limited, you do want to get that agreement in place by the end of the year. So if you're planning to buy a vehicle, but you don't want to pay for it until March, but you want to get it in this year, you can go in, set up the contract. You can actually buy the vehicle with a 90-day, payoff or whatever, happens there. And you would qualify to be able to move that in the current year. You could pay for the vehicle on credit card, and you do it that way. Same thing. You get to delay paying it, which I don't know that I would do that with the vehicle because of credit card interest rates. But if you had a 0% or something where you could do that, that's another option to get it in the current year. Okay, so that's the first one, buying a work vehicle. And of course, there are specific considerations that go with that. So you're going to want to talk to your tax person. And if you're my client, you're going to want to talk to me about the specifics regarding your situation. Other equipment, first year depreciation through 179 come in many forms, not just with vehicles. If you buy new and used business software equipment, you can also write off as much as $250,000 as of the time of this writing. Okay. However, we still have some bonus depreciation. So with bonus depreciation still going, it's not 100% anymore. It's 80%. In most cases, you're still going to do pretty well just using that without having to do the 179. But either way, the equipment consideration, or this equipment consideration includes office furniture, computer systems, machinery, and software, as long as you're buying it and putting it to use in the current year. Okay, number, and it says number 5, but I don't think this is number 5. I think this is number 3, because the other two were just commenting on the one above it. Prepay next year's expenses. So if you're a cash basis taxpayer, which most individual taxpayers, sole proprietors, and S corporations are, they tend to be cash basis, which means you account for money when the money's received and you account for expenses when the money leaves. Okay, for the most part. And then there are some exceptions in there. That's a cash basis taxpayer. So if you are cash basis, then you can prepay some expenses in the current year that will be coming up next year, so you can take those deductions. That is one way to have that happen. So remember, it's what you have left that you're going to be paying, what you have left between what came in, cash basis, what went out the door, cash basis. That net is what you're paying taxes on. So to reduce that net, you can increase your expenses, or you can delay your income, and that may be coming up later, but you can actually have, if you've earned some income, you can wait and send out invoices in January instead of late December, things like that. If you are the vendor, you're going to want to pay early. So you might want to pay expenses before you actually get the invoice. You can prepay some things and send the check off, pay by credit card, whatever you want to do so that you can get those expenses in the current year. So depending on which side you are on that, both of you have some options. Number 4, I believe, is you can pay expenses using checks, mail the checks at the end of the year, December 31st. Even though they won't be cashed and deposited until the new year, they still count in the current year, as long as they're mailed. So you want to keep proof of that. All of that stuff, gosh, I would just be stressed if I had to try to remember to do all that stuff at the end of the year. So I would recommend doing those things, set yourself up a calendar that reminds you when you get to first quarter, second quarter, third quarter, fourth quarter, and maybe make it a habit at every quarter end that you're going to go ahead and pay for the things that you need to pay for, so you can move some expenses in. Another option is to change your method of accounting. That gets a little bit more detailed, and so you would definitely need a professional to be able to help you with that. But if you are cash basis and it makes sense for you to be accrual basis because you have to wait on a lot of your money, or you have to wait on a lot of your expenses or something like that, then in some cases it may make sense to be an accrual basis taxpayer. And if that is, and especially when you're talking about like construction and building residential facilities or commercial facilities or things like that, sometimes the cash moving may not be in alignment with the income, especially you're building a house. So you're building this house, all these expenses are coming up, but you won't actually get income until the end of that. So, sometimes there's special, accounting methods that you'd want to use that are unique to your business. So that's important for you to talk to your CPA about, or a financial planner. Delay some income. I think that's what I just mentioned a minute ago, where you can have some income not come to you just yet. Hold off till January so we can account for it in the next year. If you're thinking about taking some type of withdrawal from your retirement because you need it to pay for college or something like that, your child's or grandchild's college or something like that, those are things when you get this close to the end of the year and that's what you were planning on giving for Christmas, these are things that you could possibly delay and do the withdrawal in January. So give them kind of a little IOU gift card, letting them know, hey, I'm going to take that withdrawal in January so I can account for it in the future year. So that's a way. There's multiple ways to defer income, but that's one of many. And then, of course, accelerating some deductions. So you want to move those into the current year. The next one is accelerate some income, which means get some income in this year as opposed to next year. Now, why would you want to do that? Well, the reason you might want to do that is in some cases, you know for a fact that your income, because based on where you are now and the contracts that you have that are on the table, you know your income's going to be significantly higher next year, or you're changing the type of entity or anything like that, and you know your tax rate is going to go up, then what you might want to do is try to accelerate, encourage some people to prepay, maybe offer some discounts, some things that you can do in this last week of the year so that you can shift some income into the current year as opposed to it being in next year. And similarly, they need to pay it before December 31st. And the bottom line, as a business owner, it's important to consider your tax strategies all year long. Okay, you have many opportunities for savings and deductions throughout the year. However, keeping these strategies in mind as the year comes to an end will help maximize your strategies for both this year and next year. So hopefully that was helpful. I'm actually going to do another one. I'm going to let this one speak for itself. It's about 10 minutes long, nice, short, and sweet. If you want a little bit more advanced high income type strategies, I'm going to pull out and go over separately a tax strategy guide that I got from Mark J. Kohler. And I will tell you, he's on YouTube. I would definitely recommend following him. I've heard from contacts that, they followed him forever, but it's so expensive to work with his team and, whatever. We are here to help you. However, we do want to make sure that if you're listening over there, definitely run it by us before you go jumping it in so we can make sure that we're all on the same page come tax preparation time. But yes, he's giving you a little bit on YouTube, as anybody would, but for liability reasons, he's saying for entertainment purposes. And so understand that everything he says doesn't mean it's going to apply to you, but I still would follow him. Very good information. And either myself or your CPA, if I'm not your CPA, will be able to help you understand which of those things fit with you. And those, for me, would be part of our tax planning meeting that we would have. All right, every year. Have a great day, and I look forward to chatting with you guys again soon.